Capital is redeploying into logistics, global funds, and specialized assets, revealing where the money is moving today. This is the CRE360 Signal Daily Brief for November 12, 2025. Amazon is expanding its Kansas City footprint with a 1 million square foot warehouse lease, adding roughly 1,000 jobs to the region. Industrial vacancy has tightened to 4.5% versus a 6.2% national average, while asking rents are up 3% year over year to $635 per square foot. Absorption continues to outpace new supply by over 1.3 million square feet, keeping landlords in pricing control. Institutional funds are targeting Midwest logistics markets where rent growth still outpaces debt cost. Once again, the Midwest proves that logistics scale, not coastal exposure, now drives industrial investment performance. While logistics capital tightens regionally, global capital is mobilizing at scale, shifting from defensive postures to selective expansion. Meanwhile, Brookfield Asset Management has closed a $12 billion global real estate fund, one of 2025's largest raises. The vehicle targets diversified exposure across office, logistics, residential, and alternative sectors, bringing total private real estate fundraising to roughly $110 billion year to date. Brookfield's approach reflects the institutional pivot toward risk-managed diversification, balancing flexibility against rate risk and uneven recovery. Private credit and hybrid vehicles are now filling the gap left by constrained CMBS issuance, signaling a quiet re-engineering of debt liquidity. And as global funds recalibrate, specialized sectors are commanding premium attention, none more so than life sciences. On another signal, Blackstone has sold a $2.5 billion U.S. life sciences portfolio to Singapore's GIC, one of the largest sector trades this year. U.S. life sciences occupancy remains above 90%, and cross-border acquisitions are on pace to reach $44 billion in 2025. Together, Brookfield's raise and GIC's acquisition show how global liquidity is clustering around assets with income durability and innovation exposure. Investors continue to favor stable, income-anchored properties tied to healthcare and research resilience. Today's signature metric, $12 billion, the size of Brookfield's new fund, is proof that capital scarcity is selective, not systemic. And Kansas City shows how tenant demand, not speculative supply, defines success in this cycle. Brookfield's strategy proves diversification is no longer about exposure, it's about optionality. And Blackstone's exit to GIC confirms that specialized high-absorption sectors still attract liquidity even in a cautious market. For developers, operators, and lenders, the advantage now lies in one triad: credit quality, capital agility, and execution speed. Monitor the balance between absorption and new supply in logistics markets. Track the pace of global fund deployment and watch Q4 capital flow reports for early pricing signals heading into 2026. For the full analysis, visit CRE360.ai.